Yeah, today was a nice reversal of yesterday's action. So there was a string of news that came out today, but I think there's really two two US data releases that really turned the markets for the bulls, and that was the NFP, of course, non-farm payrolls, which I think it was the wage growth reduction, which inferred that inflation was cooling. So that was dovish, bullish, market up. And there was also later the ISM manufacturing ISM numbers which came out, and that was also dovish, let's say. So anyway, markets up. Now technically markets looked weak at the close of yesterday, but today it's now it's looking very bullish. So what a difference a day makes. Now we've got a close here. We're looking at the SPY. It closed essentially higher than the last, I don't know, 2 weeks. If we look at the weekly chart, yeah, the last 2 weeks, it's the highest close. So looking bullish above that all important Wednesday, the 21st high. Now the SPY is still not within the old zone, the old trading zone over here. So it hasn't even tested resistance yet, in my opinion. Resistance being price support. But it wouldn't surprise me if we had a small continuation at least early next week, unless there's some news early in the morning or pre-market that just totally makes us bearish again. But yeah, I mean that's the thing about news; it just interrupts the natural flow of technical analysis. But you've got to respect that. You've got to. I mean, yesterday, I mentioned it. There's lots of news, so it can kind of swing, and here we had a swing, and it just closed in favor of the bulls. But to be fair, it was bullish for the whole period. So anyway, SPY looking moderately bullish. So maybe continuation Monday. Obviously, all the markets did the same thing. So Nasdaq, which looked atrocious at the close of yesterday, now looks okay. I mean, it hasn't really taken that Wednesday, the 21st high out, but it'll probably test it whilst the SPY goes higher. Next week, Monday, the Dow Jones being the strongest one. I think it's the only indice that's actually within the former trading zone. So kind of reclaimed prior support there, but it was already hitting its head on resistance, which was prior support. So yeah, Dow Jones is, looks more like the DAX than anything else. But the DAX, that's a whole different story. If someone please explain to me how on earth you can buy the DAX here. I know it closed a high of day and it's kind of looks destined to go even a little higher, but I do not understand how the German stock market can be doing so well. I mean, that's really just got to be inflation speaking. But anyway, I digress. The Russell 2000, yeah, again, that's been one of the weaker ones for some time. So that looks more like the Nasdaq, just reclaiming a bit of bullish momentum there. So that could also venture a little higher on Monday, unless there's some news to just pour cold water all over that. So the markets look nice. I mean, that's no surprise. You guys follow it too. That's all I'm going to say about that. The dollar, however, that's worth a little mention here. So yesterday it looked very nice. I deleted it actually whilst I was looking at this on my own, but we had the descending breakout. So that was beautiful, double bottom descending breakout. We had a retest which held. And then yesterday, basically to me, that's confirmation of a breakout. Let's go higher. And indeed, we were going higher before all these news headlines hit the wire. And then basically we have, and this is an engulfing candle, this bullish engulfing candle yesterday. But here we've got an even more engulfing bearish candle. So to me, when you've got something so powerful and overwhelming, you're basically guaranteed to test the lows again, at least. And it's not that far away. So for me, the DXY will go lower. Maybe it's in pre-market session, so straight away on Monday or even Sunday night. But we'll be testing the lows. Let's see if it holds. If it doesn't, we go not too far below, so it wouldn't be too crazy. A bit like yields, we'll see yields, but it's the same sort of chart pattern. The support is just below. It should hold at least for one day. Maybe there's an sort of opposing news item that hits the wire, and then all of a sudden you've got this triple bottom, which is very rare actually. We'll see. The news just kind of annoys me because it ruins the pattern sometimes. But Anyway, we'll see. To me, I don't care about all these news items too, because fundamentally, for me, we're in a bear market. We're already in recession. Let's see about the depression. They're not going to have a soft landing. Inflation will persist. Rates will have to stay higher for longer. And then you're going to have a financial crisis. I'm just all possible negative scenarios combined for me. Although I'm an optimistic person, I really do believe that it's not going to be as rosy as they say. So, if they really want to play the news, then let's see how many bearish news items we do get this year. I think we're going to get quite a few, and that's not even including the black swans. But anyway, I think we'll go a little lower on the DXY. If we do take out this support with a vengeance, this ascending support should really hold. Not just because it's ascending support with a lot of credibility going back quite a long way, but there's also a bit of support down here, which should coincide with the time element, time factor. Let's look at yields now, just like the dollar, looking beautiful yesterday at the close, and then we reversed. And you can see here on the 1 year, we actually basically tested this high. So were it not for the news, we'd be screaming higher. We'd be screaming higher with the yields, just slaughtering markets. It would have been that pattern that I talk about a lot, yields, volatility, dollar up, everything down. That would have just really started to snowball. So yeah, that I think that reaction from the data was just what the Fed kind of needed. I know the Fed wants the market down too, because they believe that market down means inflation down or whatever, which is not the way to look at it, in my opinion. But I mean, for example, they want people fired because they feel like that would also help reduce inflation. Certainly, I don't agree with that from an Austrian school perspective. But anyway, yields went lower. 2 year also, look at that, just completely slammed. That's a very important one. That's the one the Fed has to follow the most. So that one was looking like it was going to test this high. And after we take out the 4.57-ish zone, straight all-time high. So what a time to smash it. And now, I mean, even if it wants to test this descending line again, it's going to basically coincide with this prior low. So for me, just call it here. Just like the dollar, really, they've all got the same sort of chart pattern. Here we're on ascending support on the 5 year. We'll probably take it out because everything looks like it wants to go just a little bit lower anyway. Not just the 2 year and maybe even the 1 year, but remember the dollar also. So it wouldn't surprise me if the 5 year loses this and goes there, just a little lower, or maybe it bounces because support has some influence. 10 years, same thing. I just feel like it will just go a little lower now, given this candle to its old lows, 3.4 or something. 30 years, same thing. So although the 30 is on some ascending, yeah, you could say, because it touches this. Yeah, so I think a little lower in yields now. Dollar also, which kind of means the market may have a little bit more of a move up to here, maybe on the SPY, Nasdaq, a little higher, etc. Yeah, you can imagine that, unless there's some news item that just totally reverses today. Let's look at gold and silver. Actually, let's look at natural gas, because I've been looking at that a bit recently. That's trying to make a bit of a hammer bottom here. So 3.5 to $4. Well, we're at 3.5, so might as well call it 3.5-ish. Nice little support zone. Really should hold. I mean, we've lost ascending support, but hence why we've moved lower to the next support zone. But this would be taking the piss. If you go even lower than this, I mean, just buy more. So I say that I haven't bought any, but I think this is a buy. Just putting it out there. Gold and silver. So like everything else, it reversed yesterday's move. So yesterday we tested prior resistance, bounced off it nicely. And today, I mean, we just screamed higher to new highs, closed at a new high, closed outside of this pennant. Gold looks beautiful, makes sense. I mean, it doesn't, 1%, not even 1% to hit 1880. So given I feel like we'll have a bit of continuation on Monday of what we saw today, markets a little higher, yields lower, dollar lower. all that plays favorably for gold to go just a little higher. So for me, a bit more continuation in gold, which is not really good or bad for me. I'm kind of neutral at this point. I wanted everything lower. I thought it would go lower. Since it's moved up, since I own the miners, it makes up basically 50% of my portfolio, to be honest. I do make good money when it goes up, but I just have the minimum holding. And I could explain how that works. But basically, just imagine you have 4,000, for example, in each miner. If they go up 10%, what I would typically do is just take away what I've made. If I still think that it's going to come down, I'm like, okay, let me just take away. If you've got 20 miners and you made 10%, let's say 400 in each one, that's 8K. Just take 8K off, put it on the sidelines, and then just hope that it goes down now. And if it doesn't, okay, I'll keep making money. So I always trim the top, but it's got to coincide with my thesis. And for this whole period, or I should be looking at GDXJ for this, but the whole period whilst we were up here, I thought, no, we're going lower. And I've been proven wrong. The miners, and it's not just the market, the miners have been outperforming, and obviously with gold and silver outperforming, especially silver. Yeah, they've kept on going higher. I'll get to the miners in a second. Let's just finish off on gold. Yeah, so gold, I can imagine just a little move higher. I mean, who knows? It could go even higher. Let's see. But I think the minimum is maybe 1880 if we have continuation. Silver, on the other hand, had a nice flush yesterday, so it lost this ascending tram line, this pennant. And everything was set up for this to happen had it not been for the data. But it reversed. It wasn't the craziest reversal, but it basically reversed yesterday. Now, the thing is, it's still outside of this ascending resistance. What used to be support is now resistance. In fact, it still didn't even touch it. And even if we get to, I think, even if we were to test this resistance, we would basically coincide with the old high of this area, 24.45. And to me, this is serious resistance. And I also think we have the secondary resistance up here. It's a gap fill on SLV. Is it not? Roughly here for me, that's basically a gap fill on SLV. I think it's 23 zone, but also this other descending. And for me, my favorite resistance and the most potent ones are the descending lines like this. And to me, this, because the one that so far has proven to work is the one that starts all the way up here and crosses here. But there's a second one that starts here. And I really do think that both apply, actually. And this is the one I had before, but I placed this one in because it looked like it was working. But the point is, I think if we get here, which I don't think we will actually, but if we do, we have another resistance pretty close above at 25, which is also a nice round number. So I feel like basically silver has a lot more resistance than gold. And I think once gold gets to 1880, if you start to see gold sort of top out, obviously it depends on everything else, yield, dollar market. But if you start to see gold weak, I'm sure you'll see silver weak wherever we are by then, whether it's here or even higher. And I just think it's another sell. So what I'll be doing is looking to trim if the miners are still higher, because honestly, if gold and silver keep going up, gold to 1880, silver to 2450 or higher, I think by then you will get the miners at their next resistance or near enough to trim. So that's how I'll be trading it. I'll just be watching to trim, because to me, it's kind of another gift to get it even higher, to sell my miners even higher. And this has basically been one of the best sectors in the market. I mean, I'm looking at all the other stocks, nothing really beats the miners. So I just want to take advantage of that too. But I just feel the markets don't deserve to be where they are. I don't believe the news. The DAX is ridiculous. So for me, I remain bearish until we cut rates, which we're months away from. And I don't even think we just cut rates like that. I think the Fed will just raise rates again, although they did say 25 or 50 basis points rather than 75. So I think the 75 is out the window for next meeting. But I think they'll do, 50, then 25, then 25, then 0, then 0. And they'll hold, you'll have months where the rates are not cut until there's a financial crisis, and then it's too late and the market's really tumbling. Because, normally when there's financial crisis and they cut rates, it doesn't just reverse like that. So I think people are really unnecessarily, unrealistically bullish. And yeah, I mean, so I think the market's going to go down. And I think the GDX and GDXJ will come with it. But if I get another bite at the apple with gold hitting 1880, silver 2425 test, which should mean the miners test even higher, I'll be selling that. So GDX for me, I mean, didn't really hit any resistance. You could say this candle's high was the same as today's candle high, maybe. GDXJ, maybe you could have more of a case. Now, resistance for me is really 40, 50, if you want to call it that, but 40 is a nice number. And we were just a couple of cents away from that. So for me, we hit 39.65 or something. That's basically 40. And because I wasn't sure what was going to happen Monday, and because I'm pretty happy with the move, and because I'm overweight some stocks, I did a little trimming, very small stuff, but I might as well mention it. Newmont, which has been my heaviest holding, that to me, it hit resistance. I had a good till cancel sell order in, so it hit automatically whilst I was away from my desk. But yeah, Newmont sold that, I think 52.85, something like that. But yeah, Newmont sold that as it's at price support. So that was good. Wheaton sold that. I noticed that was also pretty evident resistance point, just in case we don't go higher. If we do, we'll see. And Pan American Silver, I sold that because it was weak, not because it was a particular resistance point, although it was the last high. And but also the other reason is because these were worth too much. So let's say I'm supposed to have 4,000 in Wheaton, but I had 4,300. I just took away 300. Now I've got 4,000. And that's the way I do it. I really trim. And when you trim on the way up and you get surprised and it keeps going up, trust me, you're always going to have your minimum amount. And then you can buy back on the way down. So I really should have done a video already on that. And I promise I will. So yeah, that's some trimming. The last thing, I don't want to make it a long video. Bitcoin last thing, noticed that it was also up, but not crazy. So it's just like it's lost a lot of volume. And on the days it's supposed to go up, it just doesn't go up enough. But there are some days where it should have gone down more and it didn't. But I just feel like we're going to grind sideways till the time element kicks in and it's forced to make a move. What I mean by that is if you were to go sideways and do nothing, once we hit this descending line, it has to kind of make a decision. And the way what I've noticed with Bitcoin is it does adhere to technical analysis a lot. And so it's going to have to do something. And maybe there's another black swan. Maybe there's this Silvergate that blows up or some other fallout from FTX. Or maybe it's on the upside, But yeah, just sort of boring. Can I say that about Bitcoin? A bit boring until it's forced to do something or some news event comes out. That's it. Let's not look into today's action too much. It was really data driven, in my opinion, a little manipulated and twisted by the news media. And let's read into the news a bit more. I like to listen to Peter Schiff. Actually, he really dives into the numbers and just always has a very pessimistic take on the news headlines, especially from the Fed or from the government. I look forward to listening to that over the weekend. Otherwise, have a good weekend. See you Monday.